Okay, well, good morning, everyone. I'm Mary Preenon. I'm the Director of Communications for the Hudson Gateway Association of Realtors, and I want to welcome you all to another Breakfast with Benefits. And today we have our friend Sheetal Sawhney, and Sheetal did a really, really great presentation for us a couple months ago. And you had, Sheetal, I got to tell you, such great feedback, and we're so happy to have you back again. And today, Sheetal is going to tell us all about FHA loans and how you can work with your clients who maybe need a little bit of extra help with their loans. So Sheetal, the floor is yours. Thank you so much.
Thank you so much, Mary. That's so nice. Thank you. I'm so excited to do this again. I really enjoyed the last one too. So guys, for those who don't know me on this call, my name is Sheetal. I'm a branch manager at CrossCountry Mortgage. So for the last 24 years, all I do is mortgages from morning to night. I eat, walk, sleep, talk mortgages. I love what I do. And you'll see it that I'm very passionate about it. I'm grateful that I get to do what I like. And so I teach only mortgage classes, but I'm also a CE licensed instructor for realtors. And soon I'll be teaching a CE class, so where you can also get some credits. So I hope you guys will join in the future. Let's dive into FHA. So what is FHA? What does FHA stand for? Does anybody here know? I like asking questions and I'll answer them if nobody does, but if you want to give it a shot, you can unmute, answer, and then get back on, mute yourself again. What is FHA? It's always nice to know, okay, because realtors are leaders and your clients always come to you for every question. They expect realtors to know everything. Sometimes they want them to be mortgages, legal. They want to come to you for every little thing. So when you educate and speak a little bit more, you gain more credibility too, right? FHA stands for
Federal Housing Administration.
Oh my God, Hazel, thank you. I love interaction. Thank you so much. Yes, Federal Housing Administration. So guys, pay attention to what I'm going to say. Whatever I speak today in this class is something I believe realtors should know. Okay, the reason you come to this class is number one, to get educated, but my goal is more than that, is to practice it. Start using it that can enhance your business, and you can, teach your clients and guide them, right? So FHA is Federal Housing Administration, right? So what happens is the government, it's the biggest government insured loan. Just remember that, internalize it. FHA is a government insured loan. They insure the loan. So the government says, hey, listen, they roll this program out, of course, to enhance home ownership, but to make it very easy for clients to qualify. Very easy. The guidelines are very easy, and you will learn it, and you will be in agreement with me once we finish this class. But because it's so easy to get an FHA loan, they extend themselves, they loan more money, they're not too strict with credit. The government insures themselves. Okay, that's why it's an insured loan. Now, did you know, please remember what I'm about to say, it's important, because I know you guys are busy. And if you can come on video, I'll say it again, come. It's nice to see each other on video. So what happens is, did you know how much is the down payment required to avoid mortgage insurance in the mortgage world, right? You pay dash amount, no mortgage insurance, right? That's 20%.
20%.
Yeah, we all know that. Did you know that no matter how much of a down payment you put in an FHA loan, you will pay MI, mortgage insurance? Doesn't matter. You could put 50% down, 90% down. I don't care what you put down. Why? I'm coming back to it. It's a government insured loan. Okay, remember it. There are two types of insurances that the government is going to charge you when you want an FHA loan. One is an upfront insurance of 1.75%, and the second is the monthly mortgage insurance. So it's two. Okay. Moving on. Can everybody see my screen? Right? You can see my screen,
yes.
Right? Thank
yes.
you.
Yeah.
So you see here, I already put it on here. It's 3.5% down payment, correct? We all know that, 3.5 down? Okay. For a residential mortgage. What is the definition of a residential house? What is a residential property, guys?
A place that you're gonna be residing in?
Yes, Hazel, it is only for primary residence. So yes, that is occupancy. It's for primary residence. You got that right. However, a residential property is 1 to 4 family. That is a residential property. Anything that is 5 unit and plus is now commercial. So this is not for commercial. Sometimes I will get called, hey, can I buy 5 unit? No, you cannot. Only for residential property. Hazel said it's for primary residence, owner occupied. You've got to occupy one of the units. Okay. A common question that I'm asked. Okay, how long do I have to occupy it? Right? So they say, okay, I'm getting this government loan and I'm going to live in it, but is there like how long? When can I just rent the whole thing off and go buy another property?
Isn't it a year?
Who's that?
1
Who asked
year?
that? Hazel?
Hazel. Mhm.
Hazel, that's a good answer. Yes, a year is a good answer. Okay, so what does that mean? Look at this. You can actually get this beautiful mortgage with 3.5% down, get a nice 30-year fixed rate, occupy one of the units if it's a multifamily, rent the other, keep this whole thing, continue to keep it for your retirement and go buy another one. Okay, so wealth is accumulated through real estate. And you can use this program to accumulate wealth, right? And you're not doing anything wrong. You're still in compliance. Okay. Let me just change the screen. 1 second, please. Okay. There you go. All right. This is my, okay. What are the benefits of FHA, right? FHA is the most popular government-backed home loan in this country. And the benefits. Did you know that the assets, right? The 3.5% down can be 100% gift. I have done loans without a bank statement for an FHA loan. I've had clients where they had a lot of cash deposits, and we all know, right? Cash deposits are not allowed in the mortgage world. They're not allowed. Bank, unless you have to source all the deposits that you put in your bank statements. So I've had like, oh my God, they came to me with a contract, and now I have to do the loan and I have to close in 3 weeks. And there's nothing I can do. So I just said, okay, we're just going to do 100% gift because it's allowed, right? I'm taking the negative, I'm making it happen because if I show my underwriter those cash deposits, they give the down payment from those cash deposits. It's drama galore and we don't need it. I've even had a rejected loan by a bank and I closed it. All I had to do was change the assets around. Just be a little creative, remove everything and say, just let the donor give the down payment directly to the attorney. I don't need your bank statement. We're done. Okay, how easy is that? Now, the gift, if our buyer has to get, you have to get the money, right? The 3.5, the closing costs. So the gift can be 100%, but it has to be from a family member. They don't allow friends, like in the gift letter, you can't say, hey, my friend is giving me a gift. HUD requires you to give it from a relative, okay? So guys, let me tell you, when I pre-approve your clients, a client, I'm going to check income, assets, and credit, and I will check assets. I will, because many a times when I ask people, hey, how much money do you have? Oh, I have 100,000. Oh, that's fantastic. Send me the bank statements. It has 10 in it. Where is the 100? Oh, I have to sell a property in my country. I've lent it to somebody. It's in the locker. I mean, like all kinds of stories, right? So when I get that, now I can coach them, guide them, tell them what to do, and so can you as realtors. Ask the question. When you ask them, how much down payment? Oh, I have so much money. Oh, but you have it in the bank. There's no cash deposits. Don't put cash deposits, please. So you guys are the first point of contact, and you can start educating them right from there on. I will do it too, but you can as well. Okay. Now, did you know that we don't need any reserves in an FHA loan for a 1 and 2 family? No reserves required. For a 3 and a 4 family, you need 3 months of reserves. Everybody on this call, do you know what's a reserve?
funds needed to fund the costs, the mortgage, the monthly payments.
Okay, so let me tell you a definition of a reserve. 1 month of your mortgage payment. What is a mortgage payment? Principal, interest, taxes, home insurance, mortgage insurance, right? That is your complete pity. That's what it's called, your monthly total mortgage payment. So let's say if that is $4,000, just for example. So 1 month reserve is $4,000. 2 months is 8,000. 3 months is 12. Banks love reserves. They want our clients to have some money left over after they pay their down payment, their closing costs, right? Reserves is a good thing. I love reserves. I always teach my clients, get some reserves. It's peace of mind. It's a good thing to have. FHA does not require it for a 1 and 2 family. However, for 3 and 4, it requires 3 months reserves. Reserves can never be gifted. Okay, just for you to know. Okay. Seller concession. It's not been very fun, right? This market has been very crazy for all of us with all the bidding wars and oh my God, the demand supply. So we've gone through a very interesting pandemic real estate market, right? So yes, seller concessions are not popular right now. However, FHA allows seller concessions up to 6%, which means that pretty much the entire closing cost can be included. The seller can pay for the buyer's closing costs. Okay, those are guidelines. Okay, here is a question I'm going to ask you. What is the minimum credit score required for a FHA loan?
It says 580, but
Yeah,
I think they like to look
I know,
at 600.
it's in the PowerPoint, guys. I get it. Someone's smiling here because they see that. That's fine. You're right. It's there. But you know why I ask this question? Because I usually get all kinds of answers. Some people will say 600, 620, 640, and no one is wrong. So let me clarify this point to each one of you on this call. Okay. What happens is FHA allows a 580 credit score. However, a lot of the banks have internal overlays. Okay, where some banks will say, I'm not doing an FHA loan unless we have a 680 scores. The bigger banks don't have an appetite for a lower credit scores. They don't. The bigger banks, they like the better, more refined loans. It's the truth, the stricter. Now we at CrossCountry Mortgage, we fund at 580 all day long, not because we're magicians, is because number one, it's allowed by HUD. Number two, we sell our loans directly to Ginnie Mae, to the government. We don't need a big bank. We don't need a Wells Fargo and a Chase to dictate our business. We're selling directly to Ginnie. Ginnie allows 580. We do it all day long. Okay. Now, here is one other thing while we're talking about credit. When I meet a family with a 580 score, I am very nervous. That's not a good score to be in, to work with, and for you guys too. I'm going to call the realtor and first of all, I'm going to do heavy duty credit counseling for this family. Okay. I'm going to go over do's and don'ts, analyze credit. I'm very good at credit. I've been doing this for 24 years, guys. I love doing this. I will always coach clients with credit. I don't care if they have a 680 score. I'm going to say, hey, listen, let's get it up in the 700s. What can we do to make it better? Let me tell you what to do and what not to do while you look for homes. I don't want surprises. I don't want them co-signing for stuff, buying a car, buying furniture before that. I don't care what they do, or too many people, too many inquiries. They don't know. We know. We are the leaders. We're going to tell them what to do and what not to do. I actually, once I pre-approve a client and I meet them, I give them a flyer and it's called the do's and don'ts. And I say, listen, here's your pre-approval letter. I'm going to sign on it because I'm going to get you the mortgage. However, you have to commit to me that you're not going to do these do's and don'ts. Follow it. Because we don't want a surprise either. Too much time gets into working with these families, right? And they don't know. We have to lead them. So 580 score, but like I said, if it's a 580, I'm going to let the realtor know. I'm calling you and letting you know because I want accountability for you and me. We're in this together. So fully transparent. We all need to guide our families because we care and we want them to close at the end of the day. Nothing else. We have a common goal. Okay. Any questions on credit? Okay, good. So the answer that I get usually 640, 660, 680. Like yes, some banks have those. So it's nothing wrong. So guys, one other thing I want to tell you, I am known in the industry for FHA loans. I take a lot of pride and joy in my FHA loans because I do a lot of them. We are very strong with guidelines. We know our stuff. If there's an FHA loan that will close, we can close it. Okay. Parents or relative can co-sign. So let me tell you what that means. What am I trying to tell you here? When a family buys a one family house, not a 2, 3, or 4, okay? Only a one family house, we can use their family members, the non-occupant co-signers. So their family is not going to live in the property. We get it. But we can use their income to qualify them and get them a 3.5 down. A lot of parents co-sign for their kids and say their kids' income is not very, like I've done loans where the actually primary buyer only makes 30, 35,000, but we're using the parents' income and we're closing 3.5 down. It's allowed only on a 1 unit, not on a 2, 3, or 4, just for a one family, okay? But I use that a lot. Okay. You must have a down payment of at least 3.5. We know that. Okay, as far as income is concerned, we can get, we need 2 years income, no 1 year. Why do I say 2 years? Because it's like 24 months. It cannot be 23 months either. It's just written in stone, number one. Number two, just so you know, I do have a conventional loan where I can get away with 1 year tax, just 1 year tax only. So that's why this one is, no, it has to be 2 years, okay? 1 to 4 family, we already did that, right? FHA approved condos. I will talk about that in a little bit detail later, okay? Now, when it comes to income, I want you to understand that FHA's debt to income ratio is much higher than a conventional loan. What does that mean? In a conventional loan, the DTI, it's basically, what is a DTI? It is the mortgage payment plus all the debts of the client divided by the monthly income, right? That's how we qualify. That's what I do. When I check the income, I check the credit, I do the calculations, and I tell them how much they can qualify for the maximum loan amount, right? So FHA lends more money than a conventional loan. They allow us to go up to 56%, whereas conventional is 50%. Okay. You see how important it is for us as lenders to put the put the family in the right program based on their credentials and their situations. That's it. You put them in the wrong program, you can get an issue with the mortgage. Put them in the right, it's smooth sailing. That's the most important thing. To start correctly right from day one, so no time is wasted, okay? Now, when it comes to license, like a legal status, FHA can do work permits. A lot of the visas are okay. You're legal to work in this country, you can get an FHA loan. A year ago, they also approved DACA. DACA, if somebody has a DACA visa, they can get a government loan. Okay. I'm just mentioning this so in case you have any questions in the future, if there's a specific visa that you want to check with me, you can send me, a text or email, and I can check it and get back to you. Okay. Okay. I want to ask you all some questions while we're talking about credit. I mentioned at the beginning that FHA is quite a lenient, easy to qualify for loan. So let me ask you, if you meet a family, they did a bankruptcy, Chapter 7. This pandemic has been harsh on a lot of people. A lot of people have done bankruptcy in the past. They're going to still do it. These are good things that you want to remember this now. This, what I'm about to tell you, please internalize it. Chapter 7 bankruptcy, after how many years from the date of discharge can you get an FHA loan?
I believe it's 2 years, right?
Tristan,
Yes.
did you say 2 years? Anybody else wants to say anything else? Tristan saying 2 years.
5 years.
Connie says 5. Anyone else?
I've said
I'm thinking
7.
it's 7.
Yeah,
Erica says 7. Okay.
I think
Well-
it's 7.
Okay, good, good. So I'm glad that, first of all, thank you for participating. But number 2, everybody's going to learn the right answer today. And remember it, please. It's 2 years. Tristan was right.
Wow.
Yeah. So Connie and Erica and whoever said 4 or 5 or 7. So let me tell you the difference now. Okay. Conventional loan, Fannie and Freddie says 4 years for chapter 7. FHA says 2 years. Okay. Now, please educate some families. There are a lot of people who, like, we are in real estate and we don't know, right? Imagine those families. When I meet people from who've done bankruptcy and I tell them they're pre-approved, they're elated and surprised. They didn't think that they could get a FHA loan so fast. So let's educate them. I could tell you a great way to connect is to contact a bankruptcy attorney. If you know any bankruptcy attorney, they're a very good source of referrals for all of us. Okay, because they have a list, and people who did a bankruptcy, people who lost homes in the past, they really want to buy again. So it's a good thing to talk to them. Okay, now I'm going to ask you another question. Chapter 7 bankruptcy is 2 years. However, that family did not have any property. They did not include any property in the bankruptcy. Now, let's talk about a family that owned a house, did a bankruptcy, chapter 7, but now they put their properties in there. 1, 2, 3, I don't care, as long as one or more. Now, this is a tough question, so I'll just go ahead and answer it. If you had a property and you did a bankruptcy, then it is 3 years from the date you sold the property. What happens when you do a bankruptcy? The trustee says, okay, you don't need to pay the mortgages because we put the properties in the bankruptcy. They say, okay, you don't need to pay the mortgage anymore. It does not even show up on your credit, but you still own it. The deed is still in your name. So what can a homeowner do? They can do a couple of things. They can call their bank and do something called a deed in lieu of foreclosure. Deed in lieu, that's what it's called. I guide a lot of families to do that because they don't know all this stuff. They can just surrender the property to the bank. The bank will send them a form and very easily take it away. It's 3 years from that date. Or they can sell it. That's where you guys come in to picture, where you can help them, right? As realtors. Bottom line, we need the deed to be transferred from their name. They have to not be owners anymore, and then 3 years after that.
So just a question, that becomes the eligibility date and the discharge of the bankruptcy is no longer the functional date.
What a lovely question, Allison. Yes. So Allison's question is, the 3 years is from what date? Is it the discharge date of the bankruptcy, or is the date the deed was transferred? It's the date the deed was transferred. Okay. And that's why we should tell these families, hey, listen, let's get rid of that deed transfer from your name, because you can buy it to 3 years after that date. Because just because you did a bankruptcy, you know, we still need to take care of that property you own. You still own it. Because what happens if they don't do anything, right? You do a bankruptcy and then you just continue to own the property. No one bothers you because you put it in the bankruptcy. What happens is one day the sheriff department will call you and take the property away. That's a foreclosure. But then you have to wait. You have to keep waiting till that happens. happen. So it's a better, more proactive approach. If you guys list their properties and sell it, it also looks better for them that they took charge of their situation, right? They should sell it or do a deed in lieu. Selling is better. Okay. So another question. After how many years can you get an FHA mortgage if you had a foreclosure? Now you didn't do anything. The sheriff comes and takes your property away and you've had a foreclosure now. After how many years can you get that 3.5 sweet FHA loan? Anybody wants to guess the answer? No? Now it's a foreclosure, guys. Okay. So everybody remember this, it's 3 years. If conventional is 7. And that's why I want you to know the difference between an FHA and a conventional. Conventional is 7 years versus 3 years. Big difference, right? So if a lender goes and puts his family in a conventional loan, it's going to get rejected. Who needs the drama? Okay. So again, start talking to people. Find out if they had a foreclosure, educate them that it's only 3 years. If they did a short sale, it's 3 years from the date of the short sale. Okay. So bottom line is between 2 and 3 years, you're ready to get an FHA mortgage, which is really not a big, isn't that easy? It's not a very long time. Okay.
Quick question, is it also 7 years after a short sale for a conventional loan?
No, good question, Allison. It's 4 years for a conventional. It's 4 years. However, if you put 20% down and you had some extenuating circumstances, then it could be 2 years as an exception. But those circumstances has to be like very like loss of a job. We need to prove that they lost income and stuff like that. So it's we could do it. Okay.
Thank you.
Most welcome. So let's talk about some of the advantages and disadvantages of FHA versus conventional, right? Listing agents love conventional, yes. In this market more so, forget it. It's crazy. Right now it's like money talk. Sometimes you put high down payment, you still don't get the offer accepted. Are we all going through that? Right? So let's talk about the advantages, and sometimes people have a myth. So let's clarify really what is the difference. Advantages is its qualification flexibility. I just went over some of the points with you. Credit score. What's the minimum credit score required for a conventional loan? Anybody? It's 620.
680?
No, it's 620. However, let me tell you now, again, remember this. This is also very important. If I send you, I can email you a Fannie Mae link. Whoever wants me to send information, if you email me, I'll send it right back to you. Fannie Mae and Freddie Mac, they have a link where they have a pricing adjustment based on your credit score. While it is 620, oh my God, they charge so many fees and points for 620. They don't want to do a 620 loan, so they give you a much higher rate and fees. They like at least 680. So even at 680, there's a pricing adjustment. If it's a 760, amazing. You get the best rates. You get the best rates at 760, 1 family house purchase. If it's a 2 family, there is an adjustment. 3 family, another adjustment. Did you all know this? Okay, I have a government grid, Fannie Mae grid. I send that to all families. I also send it to realtors because we are a team. And I show it to them that, look, this is why you get this and this is why you get that. Because it's good to educate. This is the biggest investment in their lives. They need to know why, when, how. right? So I can send you the link. You can share it with them too. So that's a qualification flexibility, right? That the credit score could be lower. Now I said that FHA is 3.5 down, 1 to 4 family, right? Let's compare it to conventional. Conventional, we have a program 3% down on a 1 family, but that's an affordable loan. Okay, usually the typical traditional conventional loan is 5% down on a 1 family, 15% down on a 2 family. Okay, and then 20% on a 3 family. See the difference? That's why FHA is the most popular government-backed insured loan for all these reasons. Okay. The seller can put 6% towards closing costs. A conventional is 3 to 6 depending on the amount of down payment. If you're putting less than 10% down, then it's only 3% that you can put for concession, but that's a small difference. Okay. Disadvantages, because FHA does have some disadvantages, right? Number one is the MI, mortgage insurance is a little bit higher. Why is that? Because the government is giving the money for people with lower credit scores. They're giving more money based on their income. They're giving a better rate. Even though the credit score is lower, they're giving a better rate. So what is the mortgage insurance protects the lenders against any future defaults. So they're taking the risk by giving them the money and a lot of it, but they protect themselves with the mortgage insurance.
And that's why it's for the life of the loan.
Let me go over that with you, Allison. Good, I love it. Thank you for paying attention. So look, what FHA did was it changed guidelines a couple of years ago. Now, if you get an FHA, now this is a disadvantage, okay? If you get an FHA loan and you put less than 10% down, the MI is for the life of the loan, unless you refinance it, of course. Life of the loan. The only way to remove it is by refinancing. Now, if you put 10% or higher than 10% down, then the MI is up to 11 years. After 11 years, you can remove it if you have the 20%, if and when you have the 20% equity. Conventional is nice. This is a big advantage that you can remove the MI. That's a good, sweet part of conventional loan. So what is my goal, right? When I meet the family, I want to see if they qualify for a conventional loan first, because that's a good advantage. Guess what? A lot of people don't. And then you go for the FHA. Okay. So it's not about, sometimes you as realtors, don't tell a family, oh, don't get an FHA loan. It's not a good loan for you. But you don't know their situation. You don't know what their credit score is. You don't know their income. You don't know their assets. So if you tell them that, and then if they come to me and I'm saying something different, then they feel bad. Now I have to deal with what's ingrained in their heads. And FHA is a very sweet loan. Sometimes the rates, I have gone through situations where the monthly payment is lower in an FHA loan compared to a conventional because their credentials. Conventional was too high, the fees and okay, so it's very case by case. When the credit score is higher, and we want to go for a conventional loan because they give you a better deal, absolutely, and the MI could be removed. Okay, anyway. Now, one other thing, right? That for an FHA loan, what do they say? The appraisal. Let's talk about FHA appraisals. I've had realtors that asked me, hey, is the FHA appraisal, is the value going to be different because it's an FHA appraisal compared to a conventional? What is the answer? Is the value different? Is it treated differently? The answer, yes, tell me, Sherry.
No.
No, thank you.
No, it's a place. It's just a place. That's the value.
Yeah, value is the value. How is the value determined? By comps, similar properties that sold and closed, similar to our subject property that sold and closed recently. That's what the comps are. That's how comps are, the same comps are chosen, same value, whether it's FHA or conventional, it doesn't matter. One of the things that FHA requires one of the guidelines is peeling paint. If the property had peeling paint, they want you to fix it before closing. That's an additional thing that FHA requires. So if you have a listing, if the seller doesn't mind putting that paint on there, then before the appraiser goes to see the property, have them put a cheap coat of paint so that condition is not going to be there. Yes.
On the appraisal side for an FHA, they also have to check the attic, the crawl space. They have to
Yes.
make sure that all appliances are working, or they cannot provide an FHA on that loan on
Yes.
that property.
Yes, and I'm coming to that.
Okay,
And besides what you said, also a handrail.
that is correct.
Okay, you need a handrail for safety purposes. It's
Mhm.
really inexpensive, but if there are stairs going down, just put a handrail on there. One other thing is appliances. Let's talk about utilities, right? Even a conventional loan, and I'm going to clarify this. I'm going to add on to what she's just said. People think, realtors think, or clients think, oh, if an FHA loan, you need to make sure utilities are turned on and functional. No, even in a conventional loan, you need to make sure that utilities are turned on and functional. We as lenders could be sued. What if we just finance on a property? The buyer buys it, and then later on, nothing works. He's going to say, excuse me, what happened? I'm a first-time home buyer. Why did you fund on a property like this? So no, even if it's a conventional, we need to make sure it's turned on and functional. So really the two major things is the peeling paint and the handrail. Those are the two major things. Recently, I've had no other. Years ago, decades ago, FHA was stricter, but now, no, it's not. Things changed. It's not that bad, at least not that I see of. It's, those are with barring those two things. What else?
Can I ask a quick question?
Oh, please. Yes,
How about good morning. How about broken windows? I think, didn't that used to be an FHA issue?
Yeah. So the
Is it-
general condition of it, like if it's a broken window, then it may have to be fixed. If the roof is falling apart, they want to make sure that the roof's life is at least 2 years. So yeah, those are also like it's decent house, decent condition, functional home.
Thank
We're
you.
looking at a functional home. Okay. Now, before I come to this, right? One other thing, let's talk about 203Ks for a quick second. Anybody here wants to know a little bit about 203K? It's just like an FHA loan, but you can borrow money to fix the house while you get a purchase money loan. So it's a one loan. I can tell you really quick and not spend too much time on it. But if you're buying a house for easy math, let's say for 400,000, you want to borrow 100,000 to fix the property. We can do it simultaneously while you're under contract and you're buying the house. You qualify for that extra 100, we can tag it onto the loan. Okay, again, 3.5% down, same guidelines, same exact guidelines, 3.5% down, but now we need a licensed contractor. We need a copy of his license. He needs to have liability insurance. We need an estimate and details of repairs, and we can do the house. So a 203K is really good for people who like the house, which requires some amount of repairs or some updating. They don't have the funds to do it. So they don't want to buy a house and get into trouble and saying, oh my God, now we don't have the money, now we have this house. Get a 203K loan. Borrow the money. Any issue in the house can be fixed with the 203K loan. I've done homes which were burnt. I've done homes which were functional, but the family just wanted to update it. So you showed a family a house, they like everything about it, but maybe they didn't like the kitchen and the bathrooms. Say, okay, you can borrow and, borrow the money and fix it to your liking. It's a good loan, just not for everybody because it's a little intense with paperwork because you're dealing with contractors. A little bit more work from our perspective, from lenders. We have to work a lot more for a 203K loan. Okay.
Can I ask you a question?
Yeah, please.
Good morning.
Morning.
Talking about that, that's the rehab loan, right? The 203K.
Yes.
Can person do an FHA, let's say an FHA loan, and maybe after the fact, they can do also a 203K just to fix the house? Like the extra, just, individually?
You mean after buying and closing?
Yes,
Okay. So look, Iris, right?
yes.
It's why would the client, they just spent money on closing costs and they bought the house, right? I would rather that they do it simultaneously because now they don't need to spend money again and go through the process again. Right? So
Okay.
it's better they do it at that time, right? Or if they already closed on the house, then I would say get a line of credit and just fix the house if they can, rather than go through the whole process. Now they have to go through a full closing cost and go to the fees again.
Okay,
No
that makes
fun in
sense.
that. But yes, now a 2 or 3K loan can be done even for a homeowner. Just Iris, to answer your question, I did a lot of 2 or 3K loans for homeowners. We did a refinance. They wanted to extend their homes. They wanted to fix their homes. They said, you know what? The pandemic created, they wanted more room. People started to fix their homes as well, right? We got busy with contracting and fixing. We did a 2 or 3K loan. They borrowed the money and they fixed it. Some people extended their homes. They made it more functional, finished their basements, finished their attics. Okay?
Thank you.
Okay. I've had cases, just so you know, that after the home inspection was done, right? And so the family said, listen, I need at least 100,000. I want to fix this home, but I don't have the money. We converted it into a 2 or 3K and saved the deal. Okay. So you can save it. We're in the middle of the loan. We say, okay, you know what? You want to change it? We change it. And they continue buying the same home. Okay. All right. Now let's talk about what is FHA Streamline, right? This is so interesting and cool. It's the only miracle left in the mortgage. This is a really miraculous thing that FHA offers. If you know a family that has an FHA loan already, okay, we can do something called a government rate reduction every time the rates are lower. I cannot tell you how many of these I did in the last 2 years. We don't make a lot of money on them, but it's such a fun thing to do for a client. Hey, the rates are in the 2s. When you bought it, it was in the 5s. Just come in. We're not checking income. We're not doing an appraisal. We're not charging any bank fees. We're going to reduce the rate for you. We look like heroes. Now, the other thing I have to tell them, please don't refer your family to me that does not have an FHA loan. This is only from an FHA to an FHA. If you have an FHA loan, we reduce it when there's an opportunity. When the rates are lower, we reduce it. Really good program. No income verification. You don't have a job and we're doing it. Incredible. Nobody's calling you for an appraisal. No one's getting into your home. It's a quick, it's called a streamline because it's so easy. From an FHA loan to an FHA, just with lower payments, reduced rate, lower payments. That's a big advantage. It's so sweet. So in the pandemic, people lost jobs and we were just reducing their payments and they caught those 2s, right? How nice is that?
Is there a fee associated with it?
We waive our fees. So we don't charge, as a bank, we don't charge any fees. We just do it as a service to our past clients. So like I said, we're not looking to make a lot of money on it, but it's the most pleasurable loan to do for a family. They just bless us all the time. They refer business to us because we're doing this for them. Now, this is not in a conventional. You have a conventional loan, you want to refinance, you have to go through the entire process with verification of income, appraisal. That miracle streamline is only from FHA to FHA, okay? Got it? Okay, cool. Cool. Now, let's talk about condo financing, okay? So FHA has a link, right? we have a link that once you get into that link, this is the link, right? It's over there. I can send you all an email with some of the things I want you to have and archive, save on FHA links, the Fannie Mae thing. You can save it and you can use it and forward it to a client that needs that information. If you give me your email, I can send it to you. But this link, when you get into the link and you put, let's say, the state, you put zip code or county or city, whatever you want to put, it would tell you which buildings are approved for FHA financing. If the buyer is FHA approved, I send the link to the buyer and to the realtor. Same, again, full transparency. None of us need to waste time. We are a team. We take care of, we speak the same language to help these families, no confusion. And you guys, you please do not show homes, condos to families that are not going to be approved for that building. Because some of the buildings are non-warrantable. They have issues. They have red flags. They are not FHA approved. They are not Fannie Mae approved, but they look pretty. So that's why they're still on the market. And then they require a different type of a program, a non-warrantable program. So anyway, coming back to FHA, you get into the link. It's a lot simpler. Is it there or is it not there? Okay. So when it comes to condos, I do a lot of conventional for that reason, because I have great conventional loans, limited reviews. So majority of my my financing on condos is conventional because this is too restrictive. So many buildings are not in that list, right? Because homeowners have not applied to HUD. It's quite a process. It's an effort to do all the paperwork and the application. They've not done it. Okay. My bottom line, why am I sharing that with you? If you have a buyer who's a condo buyer, then share that link, look at it. Let's look at the approved buildings, make your life easy, narrowing down the search. Okay. Any questions?
Yes, Chantal, I have a question. What if you are working with a buyer who starts off with a conventional pre-approval, then has an accepted offer and you're moving forward, and all of a sudden, lo and behold, they're only eligible for an FHA loan, but the property is not necessarily on this a condo approved list, or for example, what do you do?
Okay, so Connie, that was a bad way to start.
Okay.
Approval. Okay, so the lender did not do the right job. If a family is approved for FHA, then you should not have a conventional pre-approval. That's creating a mess.
Well, what if they were told that they had a pre-approval for a conventional? And then I guess as it goes through underwriting, this is actually happening to me. There's a situation where a pre-approval for a conventional loan was supplied, and now through the process, they no longer are eligible.
No, what's happening in this marketplace, which has been very unique, this crazy stuff is happening. Sometimes lenders are putting conventional on pre-approvals just so that the bid is accepted. But the client is an FHA buyer for XYZ reasons based on their credentials, right?
Right.
So usually when it's a house that's in decent condition, everything is fine, you close. It's okay, they close FHA and the listing agent says, okay, whatever, let's close it. It's fine. But when it comes to a condo, you cannot do that because a condo it's going to get denied. There is nothing anybody can do because HUD will not insure the loan unless it's in the approved list. So we're wasting time. So what you need to do is, Connie, you take that buyer and say, listen, you only qualify for conventional. Find out how to do it as a conventional.
And there's no way that complex can become eligible, correct?
Okay. Another good question. In order for that complex to get an FHA approval, the management will have to send an application to HUD. Right now, HUD is so behind in this pandemic. People don't, not responding as fast. It could take months. And after months, it could be denied. They're strict.
Yeah.
So do you want to take, who's going to take that? It's not worth it. It's not worth it. So
okay.
I would suggest we have to find a way to pre-approve this buyer. So if the building is non-warrantable, means there are some red flags in there that Fannie Mae will not do, then we have to get a non-warrantable lender.
Okay.
So guys, in my last breakfast with benefits that I did for the board, I did a class on self-employed borrowers, non-warrantable condos. That was a different topic.
Doesn't it also have to do with the amount of renters you have at a condo complex as
yes,
well?
Yes, it does.
So basically a HUD affidavit, or I'm sorry, an application is not going to do it if you have a 70% renter to owner ratio.
Yeah, they won't do it. You're right.
Yeah.
So let's not even waste time applying. Absolutely. They need majority of homeowners to be occupying their building. Yeah. Okay.
Yeah, thank you.
Most welcome. But we have, like, I have a great conventional limited review program. If they put 10% down, we go limited review. So there are a lot of nuances in the lending world when it comes to condos that we need to look at the credentials and work it. Okay. I actually do one lunch and learn or breakfast with benefits, just talking condos and taking a deep dive into what are we looking at, right? Why condo is the place where most of the deals are dying. Why? Because lenders are not checking the association, the financial health of the condo association. We're in the middle of the process. Now we get the questionnaire. It's not good enough, deals dying, but that's a waste of time. We have to do that in the beginning, not in the middle, because now it's so much drama and it's not worth it, right? Yeah, so coming to this group, when it comes to condos, you guys lead, your time is of the essence, right? You tell the lender, have you checked the condo? Do you have a condo questionnaire? Have you checked, does this program will fund on this building? After knowing all the questions, does it meet the guidelines? You make that extra phone call and make sure the lender has done their due diligence so that the deal is not going to die later. Get more involved, you know? Okay. Now I'm going to ask you a very, very good question. Really cool question, actually. And that question is, what are the mortgage limits for an FHA loan? 3.5 down, 1 to 4 family. What's the mortgage limit? Anybody here wants to tell me? For a 1 family house, what's the mortgage limit? No guesses?
No.
Okay, then I'm going to just go straight up and tell you, okay?
It depends on the county, doesn't it?
Yes, it does. Absolutely. I want to share the screen with you with the, let me see. Okay, if I can't share the screen, I have a link that will tell you, I'm going to email you the link where you can actually, when you put in the county, it tells you the limit, right? So a lot of the counties in New York, let's say we have Nassau County, it's 1 family house is $970,800. That's a lot of money, right? 3.5 down, 970,800. Okay, 2 family is $1,200,000, $43,050. So 1.2 and change. 3 family is 1.5 and change, and 4 family is 1.8 and change.
And she told that this is the loan amounts, not the purchase price amount.
This is the loan amount, not the purchase price. It's the limit, FHA loan limit. Bottom line, I just wanted to make that point to you because it's a lot. It's a lot that the government lends, right? Let me just share. I really want you to see this 1 second. Let me just see if I can.
I have a question.
Okay, do you see the limits? Do you see my screen?
Yes. Yes.
So look over here, right? Let's say, for example, Putnam County, Queens. Okay, 970,800. This is what I was just telling you. 1, 2, 3, 4. You see this? Some of the counties are not so high. New York is big, has many counties. So that's why I'll share this link with you. So you should have this. You know which county has what limit. Okay.
So I have a question. Now that we've had this unstable up and down in the real estate market this year, will these numbers be looked at again? Because Orange County, for instance, is at 420. Most of my single family homes are going for more than 420.
More than
most, not
420?
all of them, not all of them, but a lot of them. So will these now be readjusted or will they stay like this because,
So Bernadette is asking a question. Are these limits going to change? So the answer is no, Bernadette. These are the 2022 limits. They will change next year again. The limits already changed in the beginning of this year. They announced the new limits and now this is here to stay up until the next revision. And yes, so if Orange County has more, because prices are high, too bad. That's the maximum. If you want an FHA loan, that's a max. Otherwise, we should change it to a conventional loan. Okay. So guys, with all these limits, right? Some of them have really high limits. There's no income restriction either. 3.5 down, no income restriction, 30-year fixed, no prepayment penalty. Pretty interesting. So, I tell you one of the simple things that I talk to clients when I meet them, right? Because sometimes I meet like young buyers and they say, oh, I want to buy real estate. I want to buy one family, and then I want to buy the other family. I'm like, oh, wow, that's great. So would you all agree that wealth is accumulated with real estate? Yes? We're real estate people, right? Haven't we seen so much money being made by our clients? It's fun to assist them and witness all their success and appreciation in property, right? One simple technique that I teach them so my clients have multiple properties and now their kids are buying homes and we do that, right? So look, you buy your first home, you get an FHA mortgage. So let's say you get a multifamily home with 3.5% down only. Okay, let's say you live in it for a year or more than a year. After that, you decide to rent all the apartments and let the rents take care of the mortgage while you now get another house, a one family, a mother, daughter, whatever. When you do that, what is the minimum down payment for the second home you're buying? Now you want to buy your one family, mother, daughter, whatever, right? How much down payment do you have to put now that you already own a two family and you got an FHA mortgage on it?
Get it from your equity.
My question is down payment. How much down payment for the second time you're buying this house? How much down payment is required?
0.
There's no zero down unless you're a veteran and you
Okay.
have a VA, VA certificate. That's a great loan, but no, that's not the case here. So let me answer the question. Now you buy your one family, you can put 5% down and get it conventional. So you can buy two properties, one with 3.5, one with 5% down. Both are low down payments. You're on your way to accumulate wealth and have some real estate investments. Simple, doable. FHA will not fund on co-ops. FHA will not fund to investors for non-occupant homes. I just want you to know that. It's only for primary residents. It's a government loan for people who are going to live in that property. Occupancy is the biggest fraud in the mortgage business, so they're strict about that. They want to make sure that they're taking this loan and they're going to actually live there. Okay? Some people say they're going to live there, they don't live there. That happens a lot. So for all my FHA buyers, what I do is I take an application and I submit it and get a fast track approval. It's already committed by an underwriter. So when you present an offer, if the buyer wants it, right? Like I propose it and some of the families say yes, especially in this market. So when you make an offer, it's already approved. We only need the contract, we need the home insurance, we need the appraisal, and we need the title. Everything else was already verified and approved by the underwriter, right? Just to present a stronger offer. If you guys are having a hard time getting FHA offers accepted, you can get me involved. I love talking to listing agents, sellers, their attorneys. I'm very truthful, honest. I give them, clear-cut answer, but I also close loans fast. I can close a loan fast. So if I say something, I honor it because then I keep my word. I have a good reputation. You guys can Google me and check me out if anything. And if you have any questions, we're almost at 10:30, I think. So If you have any questions now, you can ask me. If you have any questions later, you can ask me. But you know what I'll do is I'll text you my contact information in the chat. I have not been checking the chat at all. So let's see. My cell phone number is there. So you can text me anytime. I'm one of those nerds that I work a lot. So I'm easy to reach. Any question is welcome. And yes, if you want me to send you an email, just let me know and just shoot me an email. Okay, and I'll send you the links for the loan limits, for the condo approval, just a couple of things that you should just keep. And then you can forward it to any clients. Guys, I want to say thank you for, especially, you all, most of you had your videos on and you participated. You asked me questions and I love welcome questions. So thank you for paying attention. I don't even know
Thank
what
you.
1 hour meant.
Thank you so much.
You were very helpful.
Oh,
Thank you, Chantel. As usual, you're getting rave reviews. Because what I like about what you do is you kind of like break it down and make it really simple. And I'm not a realtor, but even I can understand what you're talking about. And I think it's very helpful that way, because a lot of times people will just throw out a lot of information, but not really keep it simple. And you did, and it was great. Thank you so much.
Oh, thank you, Mary. You guys are so sweet and kind. I look forward to meeting. Are you guys coming for that New Jersey? There's an event here. A lot of people from the New York board are coming here in Marva, right, Mary?
Right. It's the DEI Summit, and you've been getting emails about it. It's on June 14th at the Sheraton Mawa. And it should be a really, really great event. We're going to have some really great speakers there. And we get to do, meet people from having a couple different New Jersey associations, the New York State Association of Realtors is going to be represented, NAR. So it's a really great opportunity to meet some other realtors in the region. So,
yeah, and if you do come and say hi to me.
Yes.
It would be nice to meet in person.
Great. And as I said, we're going to be recording this. So we should have the YouTube link for you later this afternoon. But thank you all so much for participating. And a lot of you have also asked when we're doing these live again. And the answer is I still don't know, because it's been working out well with Zoom. We do like the live events where people can actually talk to each other and we can have like real food. So perhaps in the fall, but we will, be sending an email out and letting everybody know. But anyhow, this is working for now, and you don't have to pay for parking. So,
Mary, I'll come down there for a live event. I love live walking in the classroom.
Yes, it's great.
Eye contact, like I miss that. So yes, when it happens, please let me know. I'll come.
Yes, and we feed you. We have Panera. We have a great spread with bagels and muffins and coffee.
Yeah.
So. All right. Thank you so much, everyone. Have a great day.
Thank you.
Thank you. Have a good day.
Bye.
Have a great day, guys. Thank you for attending.
You too.
Bye.
Thank you.
Thank you.